everyone, it's Tom Kradza with another Rockstar Minute, and today we have some exciting information to share with you, and I think this will even make some of the real estate haters happy. And if you're in real estate, you always end up having to deal with some of the haters at some point. You know, for 10 years, people have told us the real estate market is going to collapse like tomorrow. And what most of these haters in real estate don't understand is our family lived through the biggest real estate correction to ever hit Canada in 1990. We barely came out of that as a family financially alive. So we survived that. We're well aware of what can happen with real estate, but it doesn't stop us from getting involved with it. But it does force us to look at the data and try to make some decisions on what we're going to do with our properties at all times. And some of the data that we look at is this US federal funds rate. So take a look at this. We're going to put this chart up. And if you look at this during economic correction, so if you go into the 1990 period there, you can see rates dropped in the US from about 10% down to about 3%. Then during the tech collapse in the year 2000, they went from just over 6% down to 1%. Then in the 2007-2008 financial crisis, they went from about 5% to about 0. And they stayed at 0 for a very long time. And now they've just inched their way up to about 2%. That's in the US. Now take a look at Canada. In 1990, that period I was discussing, rates were at an unimaginable like 14%. They dropped down all the way down to about 4%. Then in the year 2000, during the tech crisis there, they went from just under 6% to about 2%. Then in 2007, 2008, they went from just over 4% to pretty much 0, just above 0. And they stayed about 1% there for a long time. And now they're just creeping back up to about 2%. So what we can kind of conclude from this is during any economic correction, it looks like in the US and in Canada, the central banks will drop rates about 4 or 5% at least. It seems like 4 or 5%. But if they're both only at 2% today, what does that mean when the next economic correction does come and there is a correction in real estate prices? What happens then? Because they can only drop rates 2%. So how do they further stimulate the economy? Does this mean, and we don't have the answers to this, I'm just kind of like brainstorming, does this mean they stimulate the economy by printing some new money and pushing it out into the economy? And what does that do to the price in dollar terms of hard assets like good income properties? Is that a situation that after a correction, maybe I want to own income properties because the price of them in dollar terms is going up because of all this money being pushed into the economy? Could that happen? That's something we think about a lot. And it's why, and we don't know the answer, but it's why we want to own good properties in good areas that we feel like we can hold for long periods of time. Because if there is a bit of a correction, we want to be able to survive and come out of it owning these properties and not having to give them up. So that's the kind of stuff that we're looking at all times. We don't have the answers, but it is rather interesting that rates are only at 2%. And people are talking about a correction or an economic recession perhaps coming our way. What do they do in the US and Canada when rates are only at 2%? They can only drop them 2 and they need to drop them further. Does this mean new money gets pushed into the economy? And what does that do to the price of hard assets? You know, I guess it's going to be interesting if that does happen. Time will tell. We're always short-term paranoid, but we're long-term very optimistic. Hopefully that gives you something to think about. Until next time, your life, your terms.